All right, welcome back for the episode of Carnivore Trades. Today is Friday, October 14th, 2022. If not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me right here, carnivoretrades.com, for swing trading alerts and analysis. Anyways, today, Friday, here the bears answered back. So market's down 2% now. The spider's down 2% here. Triple Q's down 2.68%, giving back pretty much all of the gains from yesterday. And you might say, well, we're way off the lows still, but the gains from Wednesday's close to really here, it's not really that much. So spiders have pretty much given back almost all of that right now. Triple Q's have given back all of that and then some. So if you take a look here at Wednesday's close was 262.66. We're right now at below 262, so really a whole dollar below that currently. Still well off the lows here. But this is definitely a good answer for the bears and not what you wanted to see as a bull. When the market supposedly puts in a bottom, you want a follow through day, or at the very least a pause day, a consolidation day, maybe an inside hammer, a doji, something of that nature. You don't want to see, they call this like a dark cloud cover Maribozu candle. It's not quite an engulfing candle, but it overtakes, close to 50% of the body. And that's not good. And again, over and over, daily 20 MA, rejection, 1, 2, 3, 4 times. This is not what you wanted to see. You wanted to see the bulls challenge this trend line and maybe get a pullback, but all day long, no higher lows in sight. On all, every single screen on here. The only one that has higher lows is the VIX, the UVXY here. So a lot of weakness here, not what you wanted to see as the bulls. Again, it's not the end of the world to have a red day after a huge day like that, but the fact that this gave back all of those gains, from yesterday is not a good move, and it really just reaffirms everything that I was banging my fist on the table saying yesterday, which is that this is not a bottom. It's a short squeeze. It's a mechanical move. It's market makers cleaning up cleaning out the froth to the sell side, really. And speaking of which, I was just showing my members this here. Take a look at the put call composite right now. It's at 0.88. It's upticking a little bit now, but earlier it was at 0.78. And you can see the close here. If we were to close right around 0.88, that's one of the lowest closes in a while. And when you compare that to the implied volatility crush that we saw yesterday, it's really kind of telling of how quickly this market kind of turned around. And again, if we look at volatility itself, the VIX here, this is green again, up 1% today. And I said yesterday, it's a little bit of a red flag that the VIX is not getting, if yesterday was going to be a bottom, you'd see the VIX down 10, 12, 15% yesterday. And it was not down that much. And it's really holding up well. So that tells me that the big money really just rolled their puts over more than anything. So, we know OPEX is coming next Friday. A lot of the time you'll see some of that whipsaw start the Thursday beforehand. And I think a lot of that is indicative of what happened yesterday. It wasn't a bottom. It was just, market makers doing a cleanup operation. And it looks to me like a lot of those puts got rolled out to, November or December. So again, nothing's really changed. And again, the big all important thing here that everybody needs to be paying attention to, you need to have this at all times. 2-year Treasury down 6 basis points today. And look at where it is here on the intraday. Not that far off the CPI dump yesterday. So this is the low here from yesterday on the panic dump, or the knee-jerk reaction dump. We got below this pivot low earlier today, and we're starting to uptick a little bit here, but this is still near the lows, and that tells you that the Fed's job is not done and this market is not out of the woods. And what I mean by that is, you just look at the 2-year. So that's at 4.5. By the way, if we had bottomed, why the hell did the 2s and 10s spread increase to 52 basis points yesterday? That's not what happens at a bottom, guys. I'm sorry, it's just not. But in any case, 2-year at 4.5 essentially, and you just take a look at the going Fed funds rate. That's at 2.5 right now. They got still 200 basis points to go. So again, without getting too long-winded here, the 2 years telling you the market hasn't bottomed, and I'm really standing by that, what I said yesterday. Anyways, by the way, a couple other things too interesting. Let's take a look at Tesla here. I want to point this out. Big sell-off here. Elon is probably selling to buy Twitter, and that looks like forced selling to me. But more importantly, you are going to trigger a weekly head and shoulder pattern, and a big one at that. So this is a monster pattern here on Tesla. Look at this: 1, 2, 3 failed inside bars on the weekly time frame. Those are weekly patterns, very, very important. And you've got a weekly head and shoulders there setting to trigger. You even have it on the monthly as well. Of course, we still have 2 weeks left in the month, and they report earnings next week, so that will definitely be very interesting. I personally would like a bounce in this thing because I would be looking to short it. Another stock that was very weak today and yesterday as well that I didn't talk about is Amazon. Lots of weakness there today, pretty much engulfing in yesterday's move. It closed red yesterday, and I mean, this is not that far off the lows. So that's a big company and showing a lot of weakness. And you can see the other FANG names, Google, same thing, daily 20 MA rejection, Microsoft, same thing there. Apple didn't quite get there today, but same kind of in spirit of move there for Apple. But again, that daily 20 MA is resistance right now, and it's going to be until proven otherwise. I would personally like a little bit more of a bounce because I'd like to reload some shorts. I do have a small core short position right now, but it's not anything crazy, you know, in case we do start to roll over. I do have some exposure, but I would like for a little bit more of a bounce, but I'm not sure we can get it considering the price action that we saw today. Now, again, there's geopolitical stuff that could happen over the weekend. There was chatter that, and I'm pretty sure it's confirmed, that the Fed did some liquidity swaps with Credit Suisse, so they may have kind of propped them up for now. So a lot of things can happen over the weekend. I would like a bounce, but I don't see one really happening right now unless something changes. I mean, we have no higher lows here all day long, and that's after a gap up. So that was a lot of bull bait right there, and anybody who FOMO'd in there got crushed today. So anyways, important levels here for the market to watch before we get into our sectors. 3,600, all important, obviously, on the futures. We got 15 minutes into the close. I don't know if this video will go that long, but SPX currently trading just below that, about 9 points. And a master level that I'm watching as well, it's a little bit lower here, is 260 on the triple Qs, and that is the low going back to 2020, that correction there in September. And that's a level that we gapped below yesterday. And then as soon as we got above that, I said, we're going to squeeze. I told all my members to get out of their shorts. And sure enough, we got, through that. And we're now kind of just grinding towards that level. We probably won't get there today. There's only, 10, 15 minutes left, but a break of that could cause a really powerful wave of selling, if you ask me. So that's the levels there we're watching on the market right now in the near term. As far as our sectors here, let's look at the semiconductors first. Again, 4% move to the downside. A lot of volume yesterday, big volume move, but a huge retrace. And again, a dark cloud cover candle, and we've retraced more than 50% of that candle. So not a good look there for the SMH on the weekly, really on the weekly and on the daily time frame. IGV, pretty much the same exact thing. So gapped up, gap and crap day, closing near 50% of that candle. So a pretty good reversal there. For cloud software, Dow Transports, again, tried to get above that trend line. We talked about it yesterday. So they peaked above it yesterday by the close. We gapped up today, and now we're going to likely close back below it. We're pretty much right on it right now, hovering right on it. But a little bit of a rejection there as well. And that trend line kind of coincides with the daily 20 moving average on a lot of those names that we looked at earlier. So again, we'll be watching that next week to see if it can get above that. And then again, the levels are really the same here on the upside for the transports if they can get back above that. All right, we talked about rates a little bit. TNX up again, 1.5%, not above yesterday's high, but still a nice move there. Same thing with the 30-year, nice pop there on the TYX, and then the 5-year. Don't talk about that too much. That was also up 1.5%. But again, big strong uptrend here in yields, and nothing has really changed on that front. Home builders, XHB, again, pretty much an engulfing reversal. If you just take out that tail, you've engulfed the entire body of yesterday's reversal. So XHB showing some weakness. ITB, same thing, closed negative yesterday and back below yesterday's opening price currently on the ITB. So home builders in a bad position right now, and VNQ is going to lose that 618 on a weekly close. So next level here on VNQ, we'll just slap it on right now. It's about 73.50. Let's get it in there exact, 73.57. We'll get that exact gap fill in there. That's where we're looking next, and then obviously below that, the 7.5, but VNQ in a lot of trouble here, and not a pretty chart. XLF, Again, we had a nice gap up on bank earnings. JP Morgan still holding the gains. Wells is still up nicely. So no trigger on the head and shoulders yet. I stress yet, but did fade off the highs pretty nicely. Citigroup, a little bit on the weaker side. I think USB, yeah, reported as well, and PNC reported, but that has actually just kind of an inside day, so a little bit on the weaker side. So XLF, a little bit of a stronger sector here today, getting dragged down by the credit card names more so than the banks. Banks are having a good day. AXP down, as is Visa and MasterCard. So that is kind of dragging down the XLF a little bit. Broker dealers, pretty good reversal there for XBD. Basically an engulfing reversal there as well, just almost, just outside of that little tail there, but you're well below the opening price yesterday, so a good reversal there for XHP, showing a little bit of weakness here in response to the earnings today. I think Morgan Stanley reported as well. That's what it was. So down almost 5% and basically at yesterday's low. So that, in fact, let's look at the intraday here. That actually got, basically to that CPI knee-jerk reaction today, and it's not far off the lows currently. So a little bit of weakness here in Fins, not something you want to see, but at least the big banks are holding up for now. Anyways, let's get over to crude here. So crude pulling back again. Had a nice pop yesterday. That got completely faded, and that trend line is holding right now. Let's extend that out just a little bit more there. There we go. So that trend line is holding up. And again, we're right wedged in between that big yellow trend line that goes back to pretty much 2 years ago, almost exactly. So we'll see if we break through that. I would love to get down to that blue trend line for a buying opportunity on crude. I'm not sure it does get there, but for right now, that's really what I'm watching, that yellow trend line here. And then obviously the bull case would be getting back above, and then you can get up to that 95 handle here. But nice little pullback there for crude. XLE also red today, so that actually gapped down and reversed a lot of yesterday's gains. So no confirmation above that trend line on XLE. Same thing with XOP and OIH as well, pulling back a little bit. Although, again, I don't hate this chart. This is actually not a bad little consolidation pattern here on OIH, especially if it can bake in the oven a little bit longer. I do like this here for a possible advance. Anyways, nat gas, again, nothing's really changed here. Still just inside bar bearish chop, so let's not really make too much out of it. Dollar index, green as you'd expect in a down market, basically reversed all of yesterday's losses, and again, holding trend, holding the 20 moving average, and it's still a runaway freight train, so that has to be respected. That is putting pressure on gold. Gold dipping below yesterday's lows, so I don't think gold has bottomed yet, but it's close. Once we get a washout, I have buy levels already worked out, and of course I will let you guys know if you want to get in on that. Come find me on Carnivore Trades, because we are going to play that for what I think is going to be a huge buying opportunity in the metals. Same thing with silver. This did fade yesterday, so it's trying to make a higher low here, but it's pretty close to breaking through that. Again, we had that failed inside bar there, so silver under a little bit of pressure. Again, I still like silver. Silver a little bit more than gold here, but again, it's under pressure right now, so it has to be respected. Platinum is, again, the rock star, holding up really well. It's green when a lot of things are red today, up 50 basis points, even as silver and gold are red, and copper is red, so platinum holding up well. But again, copper, nothing terrible here, just kind of grinding against that trend line for now, so nothing too new to report there. We'll just leave it at that. Oh, and then lastly, let's cover the coins really quick. So Bitcoin, again, no follow through to yesterday. It's not really down that much either, so it's actually holding up rather well for right now. Basically just tested that trend line and then just kind of an inside day today, whereas a lot of the rest of the market has kind of like a big reversal candle on the daily. This one's kind of just hanging in there, so let's not make too much out of it. Nothing has really changed big picture wise for Bitcoin. All right, so let's get back over to the market here. I'm going to look at the SPX. So yeah, it looks like I'm very interested to see if they save us here. They're starting to bid volatility down a little bit. That leads me to believe they're going to pop it back above 3,600 in the last, let's say we got 5-6 minutes left. Let's see where we are on the ES. Yeah, so we're above 3,600 on the ES. I'd be surprised if they don't do some shenanigans here to get it above that level here, or maybe they want it below that. Maybe maybe for the weekly puts or something. But either way, we're hovering right on that level. Big level to watch next week. 260 on that triple Qs. Keep an eye on that, and then of course 3,600 on the SPY as well, or excuse me, on the SPX as well. And then really that I would say probably 355 somewhere in that area here on the spiders. You you lose that level and it could get ugly pretty quickly. But again, the 260 level is just a much better line in the sand, if you ask me. Anyways, guys, going to wrap it up here. You guys take care. Have a great weekend, and I will talk to you guys all next week.